Nike stock has been down heavy, almost down by 41% year to date. In this video, we're going to be doing a solid review of this stock and assess whether, based on its fundamental, it's a good buy for investors, whether it's dividend investors or those looking for growth investment opportunities. Lastly, we would, of course, go through the projections for the stock and analyst estimation for the price target for Nike stock. Let's get into it. All right. Nike stock is a footwear business and consumer discretionary, but available with ticker symbol NKE on New York Stock Exchange. From a dividend perspective, Nike stock is actually showing a very safe dividend history, a score of 99, and it does, in fact, pay a nice dividend, given that it's mainly considered to be more of a growth stock than actually a dividend paying stock. Currently, its dividend is at 1.26%, and you'd notice how it's definitely one of the highest level that it has had in the past 5 years. The last trading price for Nike stock was at $97.02. It was down by 1.6% in the last trading day. From a volatility perspective, Nike stock has a beta score of 1.24, which is considered relatively high. Keep in mind that a beta score of 1 suggests that the stock has similar levels of volatility to the overall stock market. Given that this beta is higher, you can anticipate more volatility from NKE stock. From a market capitalization perspective, Nike is considered to be a mega cap sized business with $152 billion in market cap. Lastly, it's worthwhile mentioning that they have a history of dividend increase. In fact, last time that they increased their dividend goes back to November of 2021, almost about a year ago. And at that time, they increased their dividend amounts by 11%, which indicates a fast dividend growth. Speaking of dividend growth history, it's worthwhile mentioning that Nike has increased its dividend year after year consecutively for the past 20 years. On top of that, they have actually paid their dividend without any reduction for the duration of the past 38 years. Nike does also have a very solid dividend growth streak. If you look at it, in the last 5 years, they've increased their dividend on average 11% per year. And in the last 20 years, they've increased it 16% annually, which suggests a very fast dividend growth over that time period. If you look at their payout ratio, which suggests how much of their earnings they're actually using for paying their dividends, the payout ratio currently is at 31%, and their forward payout ratio is only at 33%, both of which suggest low levels for most companies. And that's actually a good sign, because for companies that have low payout ratio, it gives them a ton of room to continue to pay their dividends and in fact continue to grow their dividend as fast as they would like, given that what we are also seeing with Nike in this instance. Looking back at the last recession years of 2007 and to 2009, during those years, their sales was down by only about 6.6%, which was definitely better and above average compared to other businesses during those years. As for their stock price, the difference between their stock high price to stock low price during those years of 2007 2009, it was about 36% decline, which again was better than that of the S&P 500, where the difference between the high to low was down by 55%. Looking at their dividend history, they do currently pay their dividend on a quarterly basis, and it's paid in the months of April, July, October, and December. For investors who last bought their stock before September 2nd, they would be entitled to the dividend income next being paid on October 3rd. And they currently receive a total annual payout of $1.22. And this is the total amount that is being paid on a quarterly basis, of course. From a timeliness of this stock, a couple of things really stand out. One is that their 5-year average dividend yield is at 1.01%. And currently their dividend yield is at one of the highest levels that they've had in the past 5 years at 1.26. That in itself could suggest that, given that it's about 25% above their 5-year average, the stock is denoting signs of being undervalued. On top of that, if you look at their forward price to earnings ratio, which is 26.5, although it's way higher than that of the consumer discretionary sector, compared to their own 5-year average, which is at 30.5, they are at a way better spot. Like, they are definitely below that. Again, that's another sign that the stock could be undervalued at this time. And lastly, we want to also point out that in the last trading day, Nike hit its 52-week low price of $97.02. That's the price that it ended at. And the highest price that the stock had hit in the past 1 year was at $177.51. Again, this could be a perfect scenario as long as the fundamentals of the stock hasn't changed and this company continues to remain a solid investment option. That's why we're going to take a look at a number of additional financial metrics and measures here to understand and assess that better. The first thing we're going to take a look at is earnings per share. Ideally, we'd like to see a company that continuously grows upward trend its earnings per share. You notice during the pandemic years of 2019 to 2020, they had a little bit of hiccup, but since then they've managed to pick up their earnings per share. In fact, in 2022, they had an earnings per share of $4.26. Within last 12 months, showing $3.86 in earnings per share, which although it's a little bit less than that of 2022, it is still higher than any of the past 10 years. In the next 12 months, they are going to have some of their earnings per share decline, but still showing $3.66. This would translate into about a 5% decline in their earnings per share. Next, we're going to take a look at their total sales or total revenue. Ideally, we'd like to see the business continuously, nicely grows their total sales. We are seeing that if you zoom out a tad bit, you're seeing that upward trend nicely for Nike. Again, 2020 was a year that was slightly an exception given the incidents in that year. But in the last 12 months, they are showing $46.7 billion in total sales. And that's quite decent. It does show that 5% increase compared to 2021. All right, we're going to take a look at next their return on equity, which measures how many dollars of profit a company earns for every dollar that shareholders have invested in the firm. We'd like to see at least a 10% threshold here. And you'd notice how Nike has knocked it out of the park with all of the past 10 years, having double-digit return on equity, well above the 10%. In fact, in the last 12 months, they are showing a 43% return on equity, which is just remarkable. Similarly, for return on invested capital, which divides a firm's profits by the money that both equity and debt holders have given to the company to gauge their management capital allocation skills, while the threshold of 8% is preferred for most companies, they've again knocked it out of the park in many years, having a triple amount of that return on invested capital compared to the required threshold. And lastly, we are going to be looking at their free cash flow margin, which is the amount of cash a company generates after paying all of its expenses and investing to maintain and expand its business. Ideally, we'd like to see that 5% threshold. And here, in all of the past 10 years, they've met or exceeded that threshold of 5%. Next, we're going to take a look at some of the valuation metrics, and this is based on Simply Wall Street data. First and foremost, you notice that their price to earnings ratio hovering around that 25.2, where it stands compared to their peers. For the peer average, in this case, for the peers that we're looking at Puma, Adidas, Under Armour, and Skechers. Puma is the one that has also a relatively higher price to earnings ratio. And again, keep in mind, a lower price to earnings ratio for the most part is ideal. Sometimes when you have a higher price earnings ratio is that investors are willing to pay a higher premium for the stock because they have more belief in the stock that this is going to be outperforming their peers, and that's why they're willing to pay that premium to get their hands on investing in that stock. Currently, as mentioned, with Nike showing that 25.2 compared to Puma showing that ratio of 22.2 and Adidas showing at 19.6. The ones among the peers that have lower price to earnings ratio, perhaps you could argue that they are cheaper as a result of that, are Under Armour with a price to earnings ratio of only 9.6, and then you have Skechers with a price to earnings ratio of 7.4. The one other part that I want to flag for you is as you look at their here, the last column is also showing your forecast annual earnings growth. Here, the highest based on the calculations by analysts is Adidas with 7.2, followed by Puma with 15.5, and then you have Skechers at 10.8 in terms of the forecast annual earnings growth. For Nike, it's estimated to be at 9.9%. Next, we're going to take a look at their fair valuation. So the current price of $97.02 based on the analysis on Simply Wall Street, based and in comparison to the fair valuation of the stock, which takes into account their future cash flows and estimated based on the discounted cash flow model, the fair valuation for the stock is at $142.01. Now, with that analysis, the current price of Nike is about 32% below their fair valuation. Next, we're going to take a look at data from Seeking Alpha Premium account. And for those of you who are interested to get your hand on the access to Seeking Alpha Premium, we do have a discounted offer based on our partnership with Seeking Alpha through the link provided in the description of the video that you can access. With Seeking Alpha Premium, you get access to their detailed analysis, stock news, and additional evaluation done by Seeking Alpha, such as their quant rating. Quant rating is a detailed analysis of the stock shares based on the findings from Seeking Alpha, whether the stock could be a good buy or is perhaps like some stock for you to hold, or whether you have to sell or do any other matter for that sense. Based on these quant rating, and this time the stock gets a score of 2.97 from a scale of 1 to 5, 5 being strong buy and 1 being strong sell. For valuation, they're getting a value of F. For growth, they're getting a value of D, but from profitability, they're getting an A+. And you can see how over time these numbers have changed for any of these categories. You also notice how their dividend is assessed. From a dividend perspective, they have a level of B, very positive, safe dividend. A, from a growth perspective, as you notice, they have fast or very fast dividend growth in the past 5, 10, and 20 years. Their dividend yield is relatively lower, so that's why it gets a D minus, but from a consistency, they get an A score for their dividend. Lastly, we're going to be taking a look at the analyst estimates for the price target in 1 year. There are indeed 24 analysts on TipRanks covering this stock. 16 of them give the stock a buy rating, 7 give a hold rating, and only 1 give it a sell rating, with the highest price target for the stock being at $156, the lowest price target by analysts being at $100, and the average price target based on those 24 analysts being at $126.05 over the span of the next 1 year. If that comes true, that is an upside of close to 30% for the stock. And we're going to take a look at the analysts on Yahoo Finance, which give the stock a 1-year target of $129.32. Well, there you have it, folks. A quick look and review of the Nike stock and how it's doing, assessing its fundamentals and its price target based on analyst estimates. I hope you found this video beneficial and gained something of value from it. If you did, don't forget to smash that like button and subscribe to our channel. Here on Momentum Finance, we post every week several videos about investing, including investing in dividend stocks, growth stocks, penny stocks. We also talk about investing in crypto and ways to reach financial freedom. By the way, don't forget to also leave us a comment down below and let us know whether you are currently invested in Nike stock and what your thoughts are about this video. Love to hear from you. Thank you, and I hope to see you next time.